Yeah, it's a good question. So one, I'd point out that the Grayscale Bitcoin Trust already has like 500,000 Bitcoin. And so some of the concentration of custody risks that could happen from ETFs, I would say, have largely already been in place to some extent. Now, the majority of Bitcoin are not held like that. They're more distributed, which is a good thing. But there are some of these big pools that could be kind of either price issues or confiscation issues at some point, and that's not something that's gonna form. That's something that's already there. They're already kind of these big pools that are technically capturable. Um, Another thing I would say is that there's a degree of inevitability to it, which is to say that any large and liquid asset is likely to get an ETF for it, and is likely to get banks wanting to hold it either for themselves or for their customers. So to the extent that Bitcoin was successful, it was always going to face this at one point. It's not like something that can't not be faced. So the question is, is Bitcoin itself designed in such a way that it's ready for it? I think it is, but that's still another test it has to go through. It had to get through like the block size war. It had to get through some early bugs in the network. It had to get through. There are some countries that banned it and then like flip flopped on the ban.
Hmm.
And there's challenges along the way, and I think this is another challenge that's going to materialize. Um, so institutional liquidity has both a pro and a con. One is the con is the obvious one, which is you don't really want a lot of Bitcoin in ETFs or in highly regulated silos that are capturable. That's the downside. The upside is that more liquidity and more kind of automatic rebalancing of large pools of capital can help reduce the volatility to some extent, which then can make it a better money for people that are using it non-custodially, especially
Mm,
in developing
right.
countries. Because the if you ask people why don't you use Bitcoin, the number one is usually volatility. They don't understand it and it's volatile. And so, to the extent that it becomes larger and more liquid and more kind of widely held, that can actually then encourage more of those small self-custodial type of buyers to enter. So I think that's number one. Um, you know, the other one, I think the biggest challenge is kind of that privacy aspect,
Yeah.
where in order, the government doesn't mind if you have Bitcoin as long as it's in a silo. The second one is okay, you can custody it, but they want to know you custody it and how much.
Yeah.
And then the third one is they really don't want private Bitcoin self-custodially to move around because that threatens their income tax model, that threatens their control over kind of sanctions. That kind of goes against the core of the current system. So they really don't want that. And I think that's kind of the bigger fight that's going to be had this decade is basically that price might be doing well, but that it's not really kind of changing things as much as you'd think because it's held back by some of those frictions. Um, the good news there is that so far it's been very hard to enforce that, right? So, for example, Nigeria cut off Bitcoin from its banking system, and they remained having one of the highest adoption rates in the world, and specifically, according to Chainalysis, had the highest peer-to-peer trading volume in the world because that's how they got around the bank blockage. And then we just saw in recent weeks, Nigeria's central bank is like reversing their decision to some extent. They're basically realizing that their blanket ban is not working, and that instead they want to try to bring it back in and regulate it a little bit, which is basically a way of saying we kind of messed up. We also saw India flip flop on this. We might be seeing the process of Argentina, because they had done the similar thing where they didn't make it illegal to own, but they said, okay, banks can't get into involved in the space as much as they want. Even fintech companies that are not banks still can't get into it. So they did this kind of series of restrictions to try to slow the outflow from the peso.
Hmm.
Um, but that's obviously probably going to be somewhat different under the current administration. And so we've seen a number of countries kind of bounce around on trying to do that, which is actually bullish because it shows how hard it is to do. In the United States, I do think that there's going to be a lot of pushback on privacy, a lot of pushback to maybe a lesser extent on self custody, and
Hmm.
that's where those legal challenges become important because kind of the strength and weakness of countries like the U.S. They have rule of law, and so it's not just they can just decide something and it just happens. We've seen, for example, the SEC keeps losing court cases, which is including kind of blocking a spot Bitcoin ETF for longer than they normally would be able to do, but court cases have challenged that. And so, to the extent that the US government tries to outlaw open source, non-custodial privacy techniques or tries to outlaw self-custody, they open themselves to a plethora of lawsuits that are pretty hard to defend against because basically saying it's illegal to, keep a large number hidden, for example.
Right.
That's, it kind of touches on that First Amendment stuff. What if you design a privacy solution and you write it in a book and all the codes in a book? It's basically what Phil
Yeah.
Zimmerman did in the
Yeah.
90s.
Yeah.
The government said, well, you can't export that encryption, that open source encryption you made because we consider it a type of weapon. And he said, well, I'll put the code in a book. And
Yeah.
so that's, now you have a constitutional court case to deal with. And so I think you could see similar types of battles in Bitcoin. But I think, unfortunately, that is going to be an ongoing, not just next year, but just
Hmm.
ongoing multi-year friction about making life kind of hard for American Bitcoiners or just Bitcoiners that kind of these types of governments can in some way interact with to basically say, okay, it's you have all these extra reporting requirements, or you're getting inquiry into this reason, or just kind of frictions that I think somewhat will be resolved by court cases,
Yeah.
but it's not quick. I'm not trying to predict any of those scenarios. Like literally, if we look back at the end of the year, if Bitcoin has dipped into like, the upper 30s, or if it's already six figures, neither of those scenarios would surprise me because it's such a volatile asset and there's so much marginal difference that can happen. But that's why instead I've been far more comfortable making 2-year outlooks, which is that I really don't know what's going to happen in 2024, but at least I feel like I have a higher conviction of what's going to happen with the combination of 2024 2025. So you absolutely could have a case where all these people are super bulled up for 2024, and maybe what they expect to happen doesn't, it gets all shifted back 6 to 12 months, for example. I think there's a lot of scenarios like that. So far, we've not really seen any sign of distribution. So, when Bitcoin goes through, kind of major bull runs, normally some of those older holders start to sell into that market strength. Maybe they want to rebalance, maybe they want to consume, now they can finally afford the house they wanted that they couldn't afford before. And so you see some of that distribution as new buyers come in. And
Yeah.
that process hasn't even started yet, based on any sort of on-chain analysis you look at. So I still think we're very early in this structural bull run, but I do think it's important not to take a bull run for granted. It's not necessarily like owed to you just because the halving's happening,
Yeah.
or just because it's on that cycle. Now, I think it's probably still likely over the next 2 years, but it is important to kind of manage your expectations and risk accordingly.